Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording here about 30 minutes before the close on Friday, September 6th. My name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. How you doing, Barry?
Doing it very well.
Good. On today's show, so the cycle window opened last week, as we've been telling you for weeks, and we emphasized on last week's show, and the market jumped out of it. So what comes next? That's what we're going to cover on today's show. What do we do now? What do
Well,
we
if you've
do
been
with the
watching the
information?
show, hopefully a lot of profits. So we'll see.
Yes, that's what should come next. So we're going to do the regular show, but with the twist of what do we do now? Where do we go from here?
Mhm.
And no better place to start than the E-mini. So without any further delay, Barry, jump in and let's go. We've
Yeah.
been waiting for the direction to be picked, and it was picked.
Yeah. Yeah. And you're also doing some commodities, right? Like the
Yeah,
key
yeah,
ones,
we're going to do key commodities that have shown some signs of
like the
life.
grains. Yep.
Hmm.
Good time to look at those. All right. So back to the E-mini. If you guys have been watching, we've been sort of telling the story for the last few weeks about ever since the high came in back in July. We've been watching that basis the weekly and looking for the pullback and then the counter trend and all these things. And if you're new to the show, it'd be really good to watch the last one or two shows so you're caught up on whichever market that you're following. So getting back to the E-mini chart is pretty much the same. We're up 270 degrees right up here. This is this 5682 area. And if you guys have been watching it the last couple of shows, we've been watching this 5566. That was the level, we were left with for 2 weeks because that's the bracket we were stuck in, 5566 and the 5682 level up here. And we neatly traded uh, right within that. And last week we talked about how there were several, actually for the last 2 weeks, we had a number of cycles that expired right in here in the middle of this consolidation. And we said at the time, once they expire, we really want to watch the direction because it's probably gonna, start trending again. Obviously, the bets are to the downside, mainly because we had that 90-week cycle that came up in July.
Hmm.
So it wasn't so much about picking a direction. It's really about timing and knowing when it's going to stop breaking, right? I think we talked about that last week. It's not so much about something getting to a price. It'll consolidate till, the correct time and then it'll start to break. And it's really waiting for that correct time. And I think those cycles that we talked about last week expired and here we go.
On this chart, that 45 sure nailed it.
Yeah, that 45 and we have 90s. We'll look at some really cool charts in a minute
Hmm.
once we get into the cash chart also. But for here, look, just the quick analysis would be once price leaves the square, which is really the upper end 5682,
Hmm.
the next big support area is the 50% level. And we talk about this, in practically every show that we do and every chart that we look at. These are the two key levels that we look at. So 5310 is the 50% level for the E-mini.
Hmm.
Okay. Now you can see, that 5310 we get from the October low in 22. The March highs, you can see how that came in exactly at the
Right
5310
there.
level.
Yep.
Yep. And what's the correction? We did a half a square correction before we started moving higher. I remember we called all this once it settled at the 180.
Absolutely.
So all that, and once that got started, the next level was back again to the 50%. But this time we were really pushing. You can see we started pushing, almost hit a false break, came back to 5200. Now this is what we call getting above and holding above, right in that circle right there.
Hmm.
And once those highs got taken out, and we had 5378, and we just traded higher to the upper next square. So if you look at it, that's kind of how we trade. So now on the way down, we because of all the volatility, we blew through that. We went to the 3/4 of a square, which is also fine. Anyway, back up, went back to the full square. Now that we're turning, now remember, this is not just another market turning. We had huge cycles at the high
Huge. Huge.
And Ben, we had your special cycles going off on August and last week, and
Yeah,
actually
early
right before the
September was
break, right?
big. Yeah, it was
Yeah.
first week of September. Last week, August, first week of September was huge, and they hit with a vengeance.
So, and when they do, and when they have traction, and this is what happens, we get a nice clean break. And you can see even at the break, we broke one day and got stuck right below 55.66 for a couple of days. And that's how you know. That's why we use these levels. You really want to, when we look at them, we're not always zoomed in. But you can see how the day after the big down day, 55.66 was right there. It's,
Hmm.
it really couldn't get above. So this is what you'd call not being able to get above and hold above.
Right.
And well, the rest is just sort of history. We kind of start slipping away. What happens next is really just manage the trades to the downside. Looks like the full path is really to 53.10. This is sort of a normal move to expect out of this. Now, if we take out 53.10, we'll have other things to deal with. And we'll look at where the resistance comes in. And when we get to the 30-minute chart, it's a lot easier, especially
Hmm.
for a 5-day, because we check these charts every 5 days. And we might check in on the E-mini on the midweek drop on Wednesday, which you guys were, asking for different things. And so we're going to take all the different commodities and other indices that you guys wanted to look at and do those on Wednesday and a little bit of the big five. And if anything interesting is happening, we'll cover that. Nasdaq,
Exactly.
Bitcoin, all of that stuff.
If
Do a
something
quick.
big's going on, we can throw the chart up and spend 5 minutes on it.
Mm-hmm. So I think that it's a good plan. Works for us and keeps us sharp at the same time.
Hmm.
So that's it. That's it for the mini. Looks like the direction is down. Is it possible we're putting in a big triangle? Sure. We'll see when we get there. For now, I think, now that we went through the entire sideways, let's enjoy the little bit of trending that we might have here. And
Hmm.
we'll continue to watch that. Really, there's no, huge support. 53.78 is really the next level basis, the daily. And after that, 53.10, those are the level to watch. If 53.10 goes, then 5200. Well, if you don't want to do a full-fledged
Full square.
full square Dow, full-fledged Dow move, then it'll be a correction. That'll be 49.46, which is 180 degrees up from the low back from October.
Hmm.
Same area. So that's kind of what we have for the futures market. Go
Barry,
ahead.
one other thing that I want to reemphasize, and you and I always talk about it, is that boring 2 week consolidation where, everyone was frustrated and, kind of disgusted and not interested in looking at it. This is what happens when the consolidations break.
Yeah.
You
So, I
get
mean,
this kind of, and the longer it is, the bigger the energy release. And this week has been fantastic for trading this break. I mean, look at the
right.
moves we're getting.
And you guys know we've been harping on this through this entire period.
Yeah.
So that's kind of how it goes. And you can see, so the power of trend lines, we don't talk about them that often. Here's a one by one. I mean, we had it sitting here, ever since the higher low came in, which it
Hmm.
caught this one. And then we broke down, couldn't really get above it. You see the false break here. Then we kind of got under the line. That's when the big, that initial drop started.
Hmm.
And look when we rallied back, look where we stopped exactly. Yeah,
Uh,
sure, it's a 270 degrees, right?
right.
But it tapped exactly that where that one by one came in. And
The kiss goodbye, like we like to say.
yeah,
Give a
very,
little kiss before it says goodbye.
and the geometries work perfectly. There was another one here.
Hmm.
And if you look at the low here, you see a trend line, but we had this trend. I had, at least, I don't know if it was on the last show, but this trend line was here before, because you start the one by one at the corner of the square. So this is a
Hmm.
corner of the square, and there's a one by one, and look where it came and stopped. And when it did that, and it came back and did these big outside bars and all of this, and eventually made a higher low and start reversing. We know, the low is fairly good because it stopped exactly at the one by one, and there was a count
Hmm.
there. So actually, that low squared out. All right, let's get back to the cash chart. And this calendar chart has been super useful.
Really good.
Yeah, it's simple looking, but oh boy, it packs everything we need to.
I mean, look at those four timing hits. Boom, boom, boom.
Yeah, right, right. They're all lined up. And
Hmm.
and this one we talked about last week before the break, or last couple of weeks, saying, hey, we have a
Hmm.
45 high to high, and this is not something to ignore. Usually really good moves come off of that.
Hmm.
And I mean, even this move coming off of a sort of this kind of a high to high leg, although let me step back just one for 1 second. So although this is a lower high, given that this was a perfect, 45 degrees high to high, it wouldn't be uncommon to have another lower high and then drop, get
Hmm.
another, not another hard move lower. So anyway, we'll keep an eye on that. We have one by one and a couple of other trend angles sitting there. So what's the big deal with the chart? Well, just like I kind of explained on the futures, the E-mini chart. So 53.15, 53.10 is really this is the SPX, of course, but 53.15, 53.10 is really where the 50% shows up from the April low. Okay.
Hmm.
That's really the next big support. And we'll have to deal with it when we get there. But in the meantime, that's where we're going. And it just so happens that the structural support that's here, back in May, the little highs that we put in, they're all in line with this 53.15, 53.10 level. And if we were to push a little harder, then we have this 52.62 level coming up. But in the meantime, let's just watch what we have to. And remember, you guys, we were talking about this is the only blue number that's on the chart. It's a number we've had all through the consolidation. Here was this 52, 55.82. We said, look, if it gets taken out, then that's probably going to start the push. That's where the shift of the momentum is going to start. And a lot of the times that how we use these levels is not just to say, hey, it's another resistance, another support, another this and another of the same thing. It really isn't. Sometimes it is if it's a key square level. But a lot of the times when we bracket something like we did with Nvidia and maybe Tesla, I can't remember, but this you want to bracket these and the way these levels are derived. If we take these out, there's a very high probability that's kind of a valid breakout, right, Ben? I mean,
Yes, sir.
all day long, right? So that's the cash. Let's look at the Dow. Really, really interesting. We're up 135 degrees from the low, October low of 23 this time.
Hmm.
And it's, the chart, the square is good for the chart. I had this 41,348 saying, if we can't really get above that, actually, it's just really the buffer between the 50% and that. The market, the market is weak. And sure enough, we as soon as we got through it, the next couple of bars, remember we looked at the same two bars in the
Hmm.
other two markets. You can see how it just couldn't get through 50% of the square, and we started slipping. And the midpoint of this up channel, we got under that today. So again, at a minimum, we should at least come and touch 39,200, which is around, where the lower boundary is for that up channel. Anything you want to add to that, Ben?
No, we were watching it because the Dow did make a little false break high, unlike the S&P and the NQs.
Mm-hmm. I mean, right here
Yeah.
for sure. And it was sneaky because it kind of sat there a little, low
For a
volatility a
couple
couple of
days.
days,
Yeah.
right?
Yeah.
Not doing much. Uh, couldn't fool us though. Hey, there's a quarter level right there coming off
Yep.
the 90 degree chart square. So
And
anyway,
the
I wanted
timing, right? You have the timing come in, it makes you suspect too. It's like it's really got to prove it.
exactly. So I moved the square from the October to the other October of
Hmm.
22. And the
Hmm.
reason for that is, this 180 is like the real key to see if this is just another kind of a corrective
Right.
move. I think this is a corrective move after all, but how, with what kind of depth.
Hmm.
So for the Dow, this 40, let's say 40,240 is the level. Again, interestingly, it just so happens the 180 degrees up just happens to be right there, which is exactly where the highs in, March and May showed up. See that?
Yeah. That's a good position because you have you have it acting as resistance and then you have it acting as support. Now you're going to see which one holds.
So
Now you're
here's
back.
the so that's here's the do or die part, because either we sleep through this next week, and if we do, I think we have a lot more to go. Like I said, the
Hmm.
lower boundaries uh, down here about 40, low boundary of the channel, say 39,200. Okay.
Hmm.
So it's all down below. And the key is to see if we slip through that or not next week. So keep an eye out for that. If we hold above next week, we'll have to see what happened on the other charts and deal with it. And I'll go through some of that strategy on the 30-minute and the weekly. We'll look at that for a second, in a second. What else do we have? Well, remember looking at this last week, Ben,
Hmm.
and look where it stopped.
Look at that Gartley. That's
Clean,
yeah,
right?
really nice.
And we were saying really nice when it was up here.
I know, but look at the resistance too when it got through that XB line.
Yeah, I mean, right here, we came
The
back
wicks, yeah, right
where we
there,
kind of
tested it. Yeah.
held up a couple of days
Yep.
and then slip in just one swoop. We're right down to the support at the lower equilibrium line, which is these are the two inside ones, and it's
Yeah.
perfect. They're a beautiful chart. So clearly, at some point, if we fail this, we're going to end up down at the lower
Down at the
line,
next one. Yeah. Where's
the
that?
next one, and that's around 52.50,
Yeah.
52.60,
Yep.
right? I mean, it's an ascending line, but I mean, that's, let's say, yeah, 52.50, 60. That's kind of where it could go if this slips up.
Very
I just,
nice.
I just,
Very nice
yeah, I just
chart.
want to share that because it's beautiful when the geometry works, and it's even more beautiful when you're on it from early on,
Yes.
and
Yes.
it's following through,
Uh-huh.
which means being able to pick that up in the geometry early on. So here's the other
That's the other one. Really
circle,
nice.
but boy, did it really push it, right? Look at that. Look at
Yeah.
just right to the line, not even under it.
Hmm.
And well, we broke. So here we go. And again, it doesn't mean we can't counter trend and continue
That's what I
to
was
move
going to say. It
forward.
gives you the arc gives you a nice sort of limit of any counter trend if this is going to stay intact.
Hmm.
And what's that, a
And
weekly? Oh, is that done? That's daily. Okay.
no, this is the daily, so it could move quickly.
Hmm.
But the key thing is 49.22 basis this is the based on the futures market.
Hmm.
So this 49.22 is sort of a interesting target level. We'll see if it gets there or not. But for now, we're just sort of enjoying the trend. So let's
Hmm.
just go with it. All right, let's take a look at the weekly chart. Weekly chart. No, let's go to the 30-minute chart. And then we'll do the weekly chart.
Hmm.
Well, if you guys remember the arrows, I kind of left them from the week. Was it last week or week before we talked about all these false breaks that were happening? We were looking at how to manage money and how to manage, not to
Yeah.
manage money, how to manage your risk
Yeah. I think we did it last week.
last week. So I left them on there. Then I thought, you know what? Why not just mark them and post them up there, every day as we move forward. So
Hmm.
and we, the chart didn't disappoint.
Today,
We have
today you could even add a couple more, right?
we have a potential what's setting up here, and
Yep.
but the more important thing is, we got the high coming in. There's a false break,
Hmm.
and this one really didn't take it out. So I mean, this is classic, right? You scare the bejeepers out of you before he drops, and then here's the other thing. We talked about this 56.29, and I mean, look how beautiful that is. We just
Hmm.
sat on top of that all night, and in the morning, it broke one little retest and boom. And who knew it was going to be this kind of a move? But we knew this cycle set expired, and we want to take those trades when the breakouts are happening.
Hmm.
And so anyway, that worked out nicely. Came down to 55.39, which was the next level major square that we had. What happened there? Once we got under, we really couldn't. This is what we mean by, get under and stay under, can't really get above it, right? I mean, here, you really couldn't hold it. One bar, next bar came down. Here, not even a single bar. Forget making air above the bar, couldn't even get a bar above it, right?
Hmm.
So this is showing a lot of weakness. It's just slowly started to roll over. We had a false break here, but it really didn't have any legs. It rolled over again. And once 54.95 was taken out, we knew it was going to get weak on the legs and had this flush. Here's a classic, I mean, really good um, false break, but you have to be quick on the trigger to, get in on that. And then straight down, went right through the 54.48 level. And 54.06 is really the level that I have on the charts. Looks like we're stopping a little bit above it, and that's fine. It's 54.10, so it's about 4 points off. But I think, I'm still going to wait and see what happens. There's a good buffer from a lot of angles between 53.85 and 54.06. So that looks like a really good, zone to sort of finish up this move before some kind of a counter trend. It just looked like a good flush today, but hey, this could go on because we have a little bit more time next week to continue this. But let's watch this level. If we hold here, then I think some kind of a counter trend. We could expect some kind of a counter trend. Anything you want to add, Ben?
Well, we want to see the counter trends because that's when we can get repositioned or add to positions.
Absolutely, absolutely. And we're getting them, and some of
Mhm.
these are very fast, so you got to be really, especially if you're trading the 30-minute, you have to be quick on the trigger. But at least we have the main levels and we have the direction, and it's been doing okay. Anyway, that's the level to watch on the downside. On the upside, it's very clear that 55.39 is the level to take out to before you when we can think about moving higher. So
Mhm.
I mean that's a lot of ground to cover, but because of the fast move, that's what we have to do, right, Ben?
That's it.
Gotta buy the
So
time.
you would say for you 55.39 is key resistance now.
Yeah, 55.39 is resistance. I had this 54.48, but you can see how easily we slice through that. So I think
Right.
that's a minor point
Hmm.
right now. And 54.39 is the main one. And if we're going to manage to come up, I mean, I would expect it to, have some kind of a reaction to 54.95. And assuming if we get above that, then the next big level is here. So I would watch both of these levels. All right. Let's move on to the weekly chart. And by the way, guys, if you guys like our work, please remember to like and check the alerts and subscribe and share and comment. If you like our analysis and if your analysis kind of collaborates what we're talking about, it'd be cool to hear and, see what kind of other cycles you guys see, especially if you're doing Gann work, because it's impossible to look at all the different, cycles that are coming up in different squares. So I try to keep, and I know we both do, we try to keep same square and try to work one square as long as we can so we don't have to move it around and confuse everybody during the week.
Exactly.
Otherwise, you can, there's so many places you can set it. But sometimes there are other settings that are looking great and they collaborate from a whole different perspective. So if you
Sure.
guys have other work, it'd be great to read about that.
I'll tell you
Anyway,
that weekly bar is an ominous bar, isn't it?
man, we talked about it last week. We talked about week before about this 56.72 being I mean, if this doesn't make a believer out of people to look at, you know, the squares and using GANs and geometry for analysis, I don't know what will.
Right.
Not that we want everybody to do it, but those who are called, you can say.
Right.
Uh, so 56.72 looks good. We came right off of it, and this little green dotted line where it stopped, that's not a drawn line. That's 1/3 of the square. So there's one here, and there's one here, and one here, and one down below. So
Hmm.
these are 1/3s. So we're finding some support at the 1/3 line. Not that these are great strong levels. So I'm guessing it looks like, from whatever bounce we'll have to see, it looks like there's more to go to the downside. But let's see what kind of move we get off the support today or early next week. It's going to be a lot of trading. So if you guys are not watching us on Twitter, try to follow us because we do post at least once a day, but usually multiple times a day.
Hmm.
Right, Ben? With
That's exactly
all the
right.
updates. But here, based on the weekly, looks like, this is the 1-2 that Ben was talking about and the fat pitch. So here's the third. If this is the third, we have a lot more to go. This is,
You got to keep swinging. That's the point
that's
now.
right. So now we're off to the races, right? And we talked about that last week. We talked about how, if any of these, if after on these where you don't have a false break or some kind of inside bar, you can always go with the low of the high bar and
Mhm.
use that as a sort of a trigger for you to tip into that trade. So anyway, so the weekly looks good. I mean, just looking at that, looks like there's more to go. So we'll just stay with that. I mean, things are finally trending for the markets. So
I
let's,
mean, even if it only does an ABCD, it takes you down to around 5,000.
yeah, yeah, sure. And I kept this box up here, this
Hmm.
550.91 area is, I mean, I mean, if we hit that perfectly, we'll have to talk about it, at that point. But for
Yeah.
now, long as the levels are holding and the directions, momentum's sort of supporting the direction, we'll just go with that. Let's move on.
Hmm. That's a breakout in bonds.
Got a breakout and got a couple of notes this week from you on bonds going, hey, did you see this?
Yeah.
And bonds, yeah, well, this triangle looks like it's breaking out, but here's,
But
yeah, exactly.
there is a but for sure.
There's definitely a big but, and that is, I'll summarize it. We're up 72 degrees from the low. Okay, normal deal. And we went back up, did a false break, and we did, and a higher low and came up a little bit higher, but didn't quite take out the false break high. So this
Correct.
is a little bit suspicious.
Yep.
Now that alone was suspicious. Then I thought, wait, you know what? That's kind of an odd thing. What's happening with the cycles? So looking at the cycles, from the low in October, we're 315 degrees out to this high. We're 180 degrees from high to high, and we're 135 from the midpoint
Hmm.
low going into this area. Well, 135 is a little bit off, but these other two, 315 and 180 is right on, right?
Yeah.
So I'm thinking this could be a high,
Could be.
So I think, okay, let's really watch this. How do we know it's a high and how do we handle this? So here's great real time watching of this. If we manage to hold about 124 at this point, if this is really a breakout, we're not going to have time for really deep pullbacks. We should just get rolling because we just cleared 72. Sure, 90 is up a little bit above, but we should get rolling because this should have traction, right? Look at this, one, two,
Hmm.
three, 4 days straight up, right, Ben?
Oh, pushing all week.
Pushing all week. So I would
Except
say
today. Today it's had a struggle. It was up a point earlier. Now it's up only 6 30
exactly.
seconds.
So
So
and
it's
that can
struggling.
happen when this, we saw what happened in the S&P when it was a 45 high to high. This is
Hmm.
180 high to high with the 135, 3415 low to high. And this, I'll tell you what though, if this is fails to put the high in, we're going a hell of a lot higher, maybe 134. Okay, so that's about
Yeah,
10 points.
that's correct. Yeah, the ABCD
Mhm.
targets right up in that
Is it up?
132 to
Okay, all right.
135 area.
So that's the thing. Because of the timing, I'm waiting a little bit. Did we hold above the square? Sure, we did. Are we jumping with both hands and feet? No. We're going to
No.
wait a little bit to see if we can hold above 124. We want to see what the next pullback comes in. Now, if we start extending, if we get above the false break high and the pullbacks following that is holding well above, the square, all right, fine. These blew out and we have more to go. But this looks a little shaky to me, so I just wanted to call that out. Want to
No, I
add
think
something?
you summarized it well. It's definitely broke out of the triangle, but we're in a strong resistance zone that it has to get through.
Yes, that's really the
And so the setup's there for potentially a false break.
right. And bonds are exactly not unknown to mislead people.
Mm.
So it's possible that's what's happening.
I remember you saying that if my memory's correct, you started out just trading bonds, right?
Yep, that's
That
exactly right. Day trading bonds at a startup, man. I was living in California at the time and incredible. I had to get up so early and then be on your toes right when the bond
yeah,
market opened.
right.
It was fun though. All right, let's go on to the weekly. So weekly, we're still sort of in that range. We really haven't made a whole lot of direction, let's say,
Mm-hmm.
directionality. I mean, we were
Mm-hmm.
down 1 week, up two, down one, up one. So this is all kind of sideways. Now, this whole thing is also going to break out. We do have a potential ABCD. So, that's why I said if those other cycles fail here, it's possible we get moving and, get up into this area. So let's watch that. But we also know very clearly what the failure level is. So let's, 124, 125. That's what we want to watch to
Yeah,
see.
you say kind of sideways on my notes. It's the fourth straight inside weekly bar.
Not kind of, it's exactly sideways.
Yes, indeed.
Mhm. And we don't want to forget where we came from. We had this 216 by 144,
Hmm.
144 by 216 in time. So, that could have pulled off a couple of things. So we're watching it cautiously. And it was okay to get to that 72 on the daily. Now from here, we have to be a little bit careful because of the cycles that we just pointed to. All right, that's it for bonds. Let's move on to crude. Couple of things to talk about.
Yeah, crude's been taking hearts all week.
Mhm. We have bonds with some cycles at the high, and we have an ABCD finishing up crude here.
Yeah, I saw that the ABCD
The problem is there's another bigger ABCD pointing a little lower.
pointing a lot lower, 62 and change, right?
Yeah, well, yeah, this one is 60
Yeah.
and a
Yep.
quarter, and the one up here is 67.
And
And
we
of
listen,
course,
we broke those triangles, so it
yeah, we did that. And really 64 and 64.75 is the square support, so that's right there. And this is the level we've been talking about, because if we get down here, we could, I mean, as of today's low, we already did a false break uh around the December 13th low
hmm
in 2023, which is pretty good. So we'll have to watch this next week. Now, if we go a little bit lower, I mean, clearly, if we can, get down to 63, we just took out the lows from last year. So a lot to watch, but I think it's worth watching because whatever move this is, once this is done, I think the other side could be a much faster, better trade.
hmm
Um, so let's see what happens. So for now, we've been talking about 73.50, and if that gets taken out, 64.75, and so far, it looks like it's trending perfectly in that direction.
Yeah, yeah.
And
I think
and
you
that's
got to
kind of
look.
what I'm watching for at this point.
Yeah, you got to look south now until proven otherwise.
Hmm. Let's take a look at the weekly.
There you'll see the triangle break and the box break.
Well, triangles, boxes, all the geometry is breaking down here. And the cool thing is we saw it happening in slow motion, right? We saw it start to
Yeah,
break down, and we took out the box. So now, this is a hell of a setup for the long run,
yeah.
because once let's just say if we don't clear it, I don't know what's going to happen, because I just didn't quite imagine $50 crude.
hmm
Now, is that a possibility? I suppose, but let's
Yeah,
see what we do with this 60-degree square. We have a lot of support here, and the support is, well, it's right at the lows today, 66.90, 67. This is 60 degrees up from the 2020 low. And this is a really good square, reliable square. We got the high at 120,
hmm
and 180 got the high back in October. So
I mean,
so
not to be bullish, Barry, but that's a 50% correction of that move, basically.
well, yeah, I mean, this is bullish and I'm bullish, but I'm just kind of trying to cover the tracks, like, okay, how can we frame this so that we're alert to both sides?
I mean, because the move up was 120 and we've come back 60.
Yeah, yeah, this is a perfect, I mean, in a huge bull market, this is a perfect correction.
Hmm
So basis the weekly, let's see what happens. We did break to the downside, and at the time, and even now I'm thinking this is a false break, and then we're going to turn around. So let's see if that happens. For now, if you guys were playing the short side, well, we're on support, right around 66, 67. And we even have a little bit of a buffer that goes all the way down to 64. Really, we end up becoming that 63.75 seems like the max extension of that.
hmm
Meaning, just like we had up here, you see how we took out the 120 by just a little bit
Hmm.
to the upside. So and we did it here. So it's not uncommon for prices to press a little bit past the square. Yeah, we'll leave it at that. So right now it's coming into support. It's already starting to find it on the weekly basis. So if we really push it like we've seen these examples, we can see it getting down to 63.75, and that'll be actually very good. We'll deal with it once we get there. Let's move along to gold.
Also something that's struggling.
Yeah, and with good reason. I mean, we squared
Hmm.
out up here,
Yep.
180 by 240, and we had some weekly stuff. So I would expect gold to back off and correct a little bit. A decent correction would be good. We also broke the wedge
Hmm.
triangle up here. So once you do that, and we had, one day up, a reverse outside bar that took out yesterday's high and the lows, it looks like gold is not quite settled yet. Let it get back down to, um, you know, have a decent pullback, and we'll deal with it at that point. But now
Hmm.
we have to go with the square that's in place. And if we look at the weekly, you'll see what I'm talking about. It's right there. So that's a
Yeah.
45-week cycle going up 90. So I'm guessing we're going to have some kind of a correction, probably a good one.
Hmm.
And if we look at these other corrections, probably about the same amount, and probably get down to this 2400 area would be very bullish and very structurally very sound,
Hmm.
especially if gold is still in a bigger bull market. So we'll see. I think this correction is probably going to be the last one to catch the bigger cycle that's still moving higher. But we have to respect that. We got in here a couple of different ways. So let's wait till it's done with the pullback. Anything you want to add on the gold,
No, I
Ben?
think that's good. I think it's right. It's bullish, but expect a
Well,
correction.
yeah, we had the square out. So
Hmm.
copper also, we had when we go to the weekly, you'll see it. We had a 216-week cycle, and
Hmm.
this is the correction following that. Not much to do. We're exactly on the 60-degree line. We're, you know, pretty much pretty much like we saw earlier. This is the 50% correction.
Yep.
So like in the gold in crude. So let's wait to see how we settle up here. We could still go down and finish the ABCD. Square we're dealing with is around 407, 406. So let's see how we do here. For now, we're just barely holding above it. We could do an ABCD down and, maybe take out these lows, make the ABCD target, and then turn around. But for now, with gold correcting, everything correcting, I think silver's correcting. I would expect
Hmm.
copper to maybe follow through. But let's watch it. So far, like you said, it's more or less a 50% correction. So that's nothing wrong with that. It's
Nothing wrong with it. Bigger picture.
no, it's a actually healthy correction. So let's look at the weekly.
And
This
there's the
week,
culprit.
yep, and there it is. And for the square, the 216 weeks. And then last week, we talked about this, 423, 424, which is 44 degrees up from the low back in 2020. We had to really get above that. If we don't get above that, this was just a poke. So this is pretty much like testing a resistant level. And you can see how we came up here and we failed, took out the low of last week, and we started selling off. Same thing happened here, happened here. So it's not easy till we get on top and the buyers really step up. So yeah, let the metals settle up is kind of how I'm looking at it.
Agreed.
So the dollar, our first target was 100.50. We got there, tested it twice, and we held today. A little bit of a higher low. So this is looking pretty good. It could be done, but I want to see a little bit more action here, mainly because we really didn't quite square out. Sure, we came down, we came down 90, from the high,
Hmm.
but I'm giving a little bit extra time. But it
Hmm.
looks like we have a low. But I think once we see a couple more days of price action, we can get on board with this. But for now, it's holding support. Anything you want to add?
No, I think the levels are good. We got to get above that half square to be out of the woods, but
Yeah, back on track for upside. Yeah,
Hmm.
but to call this out, this higher low is okay, but a couple more days of price action and see how we deal with the 130. It would be good,
Sure.
you know.
Hmm.
All right. Let's look at the weekly, which actually holds a lot more. So here's the 90
There
up
you
from the
go.
low. Yeah, really.
Hmm.
And this is why we're bullish. So this is, look, this if this is a false break, which it surely looks like, kind of like what's happening in crude.
Hmm.
And here we held the 90 up, which is 100.50. And if this is all stacked up correctly, we should finish. I mean, ideally, textbook wise, we could finish up here, maybe a little false break, but finish up and start moving higher. For now, it's a little hard to say because we're not quite there yet. We didn't quite square out. So we have to wait to see how the numbers work out. But for now, you have to say, long as we're above this level, it's on good support, really strong support, and actually quite bullish, especially if this ends up becoming a false break to the downside off the square.
Hmm.
That's my reading of the dollar chart. Let's
Yeah, I
see.
think that 90 is the good level. Yep.
Yeah, it's a solid level, man. We can't ignore that, and you can see how it's respected it. So we'll have to go with that. Like I said, this low looks good here, and the 90s there. We didn't quite do a 60, which it could, and a little bit of that wouldn't hurt so much on the weekly chart. It'll still all hold it together. But boy, like a 60 by 120 or some kind of square would be ideal to finish it off. So far, we only have this 90 here, so we're watching it. We're watching it.
Hmm.
It's under study. All right, so the euro.
Looking ominous for the euro.
So we this lower high, here's the high, did a false break, came back, couldn't quite get on
Getting
top of
stuck
that
under.
square.
Yep.
hmm So you can see the euro actually made a lower high comparatively to the dollar, which made a higher low, but the gap was much less in the dollar. So this is looking a little weak. We took
Hmm.
out yesterday's high, so outside reversal, as far as this high goes, this swing up is concerned. Let's see how it works out. So 1150 is the 72 degrees up. That's a line. We're watching that. And if we fail to move higher, I think, we're back to 108, our favorite number. So
Yeah.
it looks like that. But if we were going to go, we should really, break out early next week and get on top if we're going to move higher. Otherwise, it looks like we're going square to square.
Hmm.
We're just sort of going sideways within the squares.
And we know what happens after that's done.
Exactly.
Major moves.
hmm So here's another break of the triangle,
Hmm.
to the upside. Didn't quite get above the 90, which is really kind of ruling the weekly euro. Why? Because you can see what happened at the pullback after the first sell-off, which was pretty close to a 90 by 45. Pulled back to 50%, did this huge triangle and with very fourth wave-ish looking and possibly a false break is what I'm thinking at this point. Didn't even get to the 90, couldn't really do a false break above that. So if we start to slip, we lose this week's low. I think euro is going lower, and the dollar might actually have sealed in the low that we looked at just a little while ago.
Hmm.
Yeah, that's enough for the currencies. We are going to add the yen to maybe the weekly midweek drop. So we're going to come up with a really nice set of alternate commodities and futures markets and some indices to cover on Wednesday.
Nice.
Yeah, it's going to be fun. So what do you think, Ben? We're holding a line.
And we made a higher low, reversed up. I'm going to talk about it. It looks good.
Oh, you are good. Okay. So not
Yeah,
much to
yeah.
say other than, hey, that big low that we came in February. You can see how much patience we have here, cover it every week. And that low held. We're making higher lows. So it looks like we're moving higher. So that's looking good.
Hmm.
And as far as the Hang Seng goes, we got above the 50% and it's holding fairly well. And long as we're holding above 50% is bullish. but the key tilt, in the momentum, we have to get above 18,054. If we can get above that and hold above, I think then probably break through 1950. So we'll see how that goes. There's a lot of value in some of the Hang Seng stocks, so I'm sure somebody's going to come and buy it up at some point.
Hmm.
And this holding up, I think, is sort of maybe an early signal of that. Just saying. That's all I got. I think I'm good.
Excellent. Excellent.
All right, thanks. And I'll put it over to you, and we'll go through all the commodities that are been bottoming and bottoming, and we've been waiting for that things to move over there, right? So,
Yeah, absolutely. And there's good news is one of the groups we've been watching, the grains
mhm.
have started showing good signs.
Well, Ben, I remember just like yesterday, we talked about the big square. What happens if we lose it?
And here it is,
Mhm.
right
As we
here.
went to the next line, is what happened.
Yeah, I mean, look how fast these moves are, and that's what's beautiful. I mean, look how harmonic this thing's been, right?
Yeah,
The
yeah.
counter trend high is on the half square. We pulled back and we said, okay, if we can't hold this full square, last week we basically said if we can't hold this full square, the next target is the half square. And look where we're ending the week.
Yeah, very nice.
The thing to look at, and not to scare anybody, but just a simple ABCD. Like even if this isn't a wave three, if we just replicate the first wave,
Hmm.
I mean, look at the target.
Yeah.
Talking about 16,400.
Might scare some, might make some others happy.
That's true. That's very true. So, you know, we were triangulating these highs. We had our first move. This was the second pullback, and as Barry explained on the yes, this is what we call the fat pitch, right?
Hmm.
Because the worst case scenario, you do the ABCD. Best case scenario, you catch a fast moving third wave.
Hmm.
The interesting thing too for me is in a lot of markets, I have these harmonic balance points. They were put in early August, and look where we are. Man, if we come down and get under that, it could kick in even more momentum going lower.
Yeah.
Because when you're above it, like you could see, we came down, we pushed below it, but we couldn't stay below it. We got a heck of a bounce off of it. If
Hmm.
we come down and lose it this time, it's going to act just like the squares, and we get stuck under it, it's going to push down.
Yeah.
So,
That should
um,
be that should be something fun to watch.
yeah,
See what
I mean, this
happens.
is this is looking good. I know we posted some the NQ charts, or we did the NQ charts on the midweek show, and people have seemed to respond to that. So we'll try and keep you updated on these. Seems
Yeah,
like a lot of people are
for
interested
sure.
in them.
Hmm.
Here's your weekly. Now, what I want to show you here is last week we talked about, okay, we've only had a 2 bar up week and we had a 1 bar counter trend. We said, look, if we take out that low,
Sell it.
it's sell it, right? It's a sell. So that low was 19,140.
Hmm.
We're closing at around 18,370
Not
and no
bad.
heat, no
No.
heat, no
No.
heat whatsoever. I mean, you sold it and it was a beautiful, glorious ride down. But the thing to look at here is we're coming into support now, right? Because we
Yeah.
got the full square here, which is about 18,200. And then you've got this structural, the highs we were making in, February, March are also going to act as support. So you got this block in here that's going to give you some support, including the full square. So we got to watch that coming up, see how it handles it. Like if we slice right through and then back up and can't get over it, you'll get another fat pitch. And now, hopefully, you guys that have been watching the show for a while see how important these big 90s are, like 90 weeks or 90 months, stuff like that. Because remember, this was a 90 that got this high from the October 22 lows to the highs was 90 weeks. Yeah, the 90s are really important, and we'll keep repeating that, and hopefully people jump on that.
Hmm.
Let's take a quick look at the monthly. Now, what's interesting about this is next week we're going to get a real gauge at how it's going to handle this full square.
Right.
I'm sorry, not next week, next month.
Hmm.
This is monthly. This is the
Right.
monthly.
Right.
So next month is going to be really important. If we get stuck under this, guess what opens up?
Mhm.
16,400, which is similar to the ABCD we were talking about.
And that's like on the minimum side.
Yeah. A lot of times they'll do the full squares. You could
Mm.
see, like we went from here to here and then a
Mm.
half.
Right, right.
So this is going to be really important when we watch this next monthly bar print. If we get stuck under this full square level, and that's around 18,800. Anything to add on here, Barry? Oh, the last one I wanted to show because this was the last week I said this thing is ominous, and it
Hmm.
sure was.
That's why.
We were struggling at this full square, and we said, "Boy, if we get stuck under this, look out."
Hmm.
And as the week went along, one, two
Started making
bars,
lows and lower and
and then boom, it went. So that's how the squares work, right? When you get on top and sit on top like this, get on top, sit on top, you get the push up. When you
mhm.
get below and stay below, that's when you get the push lower. So it's all there. I mean, it's now it's time to trade that direction. Anything to add here or anything else on the NQs?
Well, I don't think we're quite near being done. So
No.
there's probably a lot more to go. So you got to, we'll talk about that as we go. But yeah, looks good.
Yeah. I mean, remember, NQs let us up, it's going to lead us down too.
Mhm.
And that's the way the market works. So, all right, let's jump over to Bitcoin. Bitcoin was not immune to the weakness.
Also leading down.
Yeah, we lost this half square
Hmm.
today. So that as long as we stay below that, then it's going to be the big test at 50,000.
Hmm.
And that's where it looks like we're headed. It looks like we're headed to 50,000 on
Yeah.
on Bitcoin.
Hmm.
Again, see here's another example of that, harmonic balance point. We come down
Hmm.
and we're testing it. If we get below it, you see we haven't really spent much time below it. If we get stuck below it, the pressure is going to be down.
Right. It just looks like it's going because all those lower highs are, it's just a classic pattern.
And this is something you and I always talk about too. Here you could see how the lower highs, it was gentle slope, right? It wasn't
Hmm.
wasn't big. And here we start getting it rounding,
Hmm.
right? It starts
Right.
rounding. And that's usually a sign of momentum kicking in. So 50,000 is the next test. If we lose that and get stuck under there, then we're down into this support here, around 44, 45,000. You can see on the monthly why this area is so important. This is a
Hmm.
this is the full square. We don't want to lose that because if we lose that, then we're going to be down in here.
Where is that 50%?
Here,
No, the next one down.
that's about
40.
40,000.
Okay.
Yeah, 40,600, 40,700. So not looking great for Bitcoin, especially if we lose that full square there.
Mhm.
And that's at around 54,000. So not surprising. We're in a risk off mode. We had the cycles change. So uh, not really surprising that Bitcoin's having some issues. Anything to add here on these?
No, I think the direction's just perfectly set. Continue to trade it. Watch the counter trends. We haven't squared out to the downside, so looks like it's still going.
On the commodity side, so today was a pretty strong liquidation day in the markets.
Hmm.
And I'm looking to see, I always check and see, okay, what's green today? What managed to buck the downtrend?
Hmm.
The only thing I see in commodities that bucked the downtrend today was natural gas,
Mm.
up about 1.5%. The grains were down, softs were down. Cocoa was up $4, but that's basically flat. The metals were down, uh, and crude was down. So pretty much liquidation day today. But the things that I did see this week, I saw accumulation in the grains. I saw good price action in sugar. And of course, as we were talking about when Barry briefly covered it, was natural gas. So let's look at these ones that are showing some promise. We'll start with the grains.
Mhm.
So here's wheat. Now wheat's been bouncing along the bottom here for a month and a half. And I've been just waiting for, give me that one push up so we can say, okay, looks like the tide may have turned here. And I think we got that in the last week or so.
Mhm.
We're bumping up against this full square. So on the daily, you could say, oh, that doesn't look too bullish. That's just a quick push up. What we're hoping to see is because we got a push up, we got a higher low, and now we got a higher high. So that's the start. Now we're going to see, can we get above this full square? The full square here is, call it 578. If we can print above that, then we're going up to the half square. And then we're off to the races. When I show you the weekly and the monthly, you'll see why I think we've got the low in here. All right, so here's your weekly. High to low, 125 weeks. What I like here is it looks like, Barry, we've got a little false break here, right? A
Mhm.
series of false breaks.
Yeah. Yeah.
If you compare it with, the lows here, the lows here, it poked through, but it never made any progress. And then we get this nice move up, this week where we cleared this area here. We closed on top of this. We closed above the half square, which is around the 535 area. And if you look to the left, look at this area here. This is where we're battling right now and where we battled for the last 4 or 5 weeks. We can push up out of here, get up into this full square. It to me, it gives us room to pull back and ride this one by one and keep moving. Now let's look at the monthly. Why do I like the monthly? We had this was an inside bar last month, right?
Hmm.
And we took out the high of that and we got some traction. We got some
Yeah.
going. But here's the bigger thing. High to low in the 2007 to 2009 area, that great financial crisis, the last time we had it.
Hmm.
High to low was 28 months. High to low from here to the recent low, 28 months. So if this cycle holds, we saw the low a couple months ago, and now we're beginning to push out. And we had this, the thing I liked is we had this inside bar, and now we took out the high of last week's inside bar.
Hmm.
So the next push should be up to this half square, which is around 608. So, and I think we got a higher low here. And this is what I wanted to see. I wanted to see three drives,
Hmm.
monthly basis, and now we're turning up. So I do believe the low is in on wheat and we're starting out, starting to get up and out here. The daily has a little more to develop. The key level for me next week is, can we get above this full square, this 578 area? If we get above that, gives us the opportunity to come back, sit on top of this, and then really go, with a higher low, higher high in place.
Hmm. Yep. Yep.
Anything you're seeing here, do you want to point out?
Um, no, no, I think you covered it well. I think that's the logic is great. I think any pullbacks that hold above that, August to September, sort of the price action is all very positive. And like I said, I'm also just waiting for the pullbacks to show up.
Mhm. I think that monthly cycle of the 28 months,
Hmm.
is a good one that, based on the price action this week, has given me confidence that we've probably seen the low, and now we just got to build the ramp to sort of turn and go higher.
Hmm.
Let's look at the other ones. The other ones are interesting too because they showed some strength where there hasn't been any in a while.
Hmm.
So here's corn. Put in the low, had a move up, pulled back, held on top of the harmonic balance point. See how that came into play here? And
Hmm.
then had a nice push up at the end of the week. This downtrend line, by the way, is
Hmm.
from the Russian invasion high.
Okay.
So it's about to come in play, forming a little triangle with this one by one from the lows. So clearly we need to see a pullback. The key here, can the pullbacks hold on top of this full square, which is, let's call it 395. We can pull back, sit on top of 395. That'll give us the launch pad on a daily basis.
Hmm.
And look at this pullback here that rested on top of the harmonic balance
Yeah.
point.
Yeah. Perfect.
It's right in here. Structurally, it was nice. Let's look at the weekly and the monthly. Here's probably why we're going to have a little bit of a pause here and a little bit of a battle. Not
Mhm.
only do we have a downtrend line, we've got a full square here. Now, on a weekly basis, the full square is around 412. So we've had basically 1, 2, 3 weeks up now, which isn't that pretty quiet and sneaky in corn. Nobody's talking about corn. Everybody hates it because it's just made, continued this sort of leakage all the way down here. And
Mhm.
now we've had 3 straight weeks up.
Right.
So if we get 1 week pullback and then can get above this full square, that would be an ideal setup. And also high to low here, 120 weeks, which is a good number for corn.
Mhm. I think once we can settle above that square, we can start talking about long side. For now, we just have to watch it and see how it's structuring.
Yep. See how it plays out on a weekly basis. Let's look at the monthly. And remember, these are early, right? Because these things have been just decimated. But here's another thing. High to low in 2012, 26 months. High to low here, 28 months. So the cycles that repeat in these things, they may not be exact, but they give you a good time window to look at and say, okay, that I need to really pay attention here. And if you notice, Barry, already we have a higher high than last month.
Yeah. Yeah.
And we're what, on the 6th of September?
Hmm.
So it's early, but the charts are shaping up. Let them push up, see if they get through resistance, and then watch that pullback for the higher low, and that'll be the good sort of lower risk entry on these types of commodities. Again, the when you look left, you can see right in the middle of all that price action is where the low came in. See all this here and all this here.
Yeah. Yeah. Looks, I mean, that looks like where they have to break anyway, just from structural point of view.
Mhm.
It's again, it's the same kind of a deal, right? It's looks like we in the right zone. It's just a matter of waiting for the right time to get the.
What, right, waiting for a setup that gives us a good risk reward. But I really wanted to highlight them because I noticed the difference in price action in the last week or so. It started last week, but it was way too early. But this week, you could see these things were being bid,
Mhm.
and somebody wanted to own them that had deep pockets. So, anything to add on corn?
No, we're good. We're on track.
All right, let's jump over to beans. Beans is similar, had a little better push. So here's your little false break at the low.
Hmm.
See that bar? We just
And
took
that
out the
trade
low.
alone would have just, look at that.
I mean, it was a great trade, right? From half square to full square.
Yeah, perfect.
Mhm. Again, another one that's battling at this harmonic balance point. So this full square here, you can call it a little zone. So say like 1,021 to 1,035 is kind of the area we got to get through now.
Hmm.
So I wouldn't be surprised to see a pullback here as long as we make a higher low and then reverse. Then the momentum can start kicking in on this one. Again, this is a trend line from the Russian invasion highs, the highs we made in 22. And I think we've seen the turn here. Now it's just a matter of letting the chart set up so we can get a good entry with good risk reward.
Hmm.
Let's jump on the weekly. High to low here, we did 114 weeks. We've had two weeks up, had an inside bar and 2 weeks up. Here's that inside bar thing again, right? Look,
Yep.
there's your high of the inside bar. And that was at what, 984. We ended the week at 1,004.
Hmm.
It's a nice way to get a read on, okay, where's the strength in the market. For the weekly here, I'd like to see us, get above this half square and sit on top of it. That half square is around 1,060. We do that, then we're building the base to push higher.
Mm.
Let's look at the monthly. 26 months high to low. The thing I like about this on this monthly is what we got a push down, and this failed to get below the lower, this square, below the full square here.
Hmm.
because now that we closed up above the full square, and so far this month the bar is above the square. If we can sit on that again, that gives us the ability to push higher. So like corn, it's early, not as developed as wheat, where we already have the higher high and the higher low, but still, nonetheless, it looks like something changed here. Price action changed. The movement in this market changed, and we're noticing it now. And so now we're going to look for the setup. Anything to add here on beans?
Well, I don't, being squared out from the high in June of 22,
Mm-hmm.
that high to these lows were down 216 degrees by 576, 576 days, which is really what is it, three squares are 144, right? Four squares are 144. So it's a big deal. 576 in time and
Mm-hmm.
216 degrees down, which would be 1.5 squares on the 144 scale. And
Mm-hmm.
that's at the low. So I think, we have a high potential that the low is in place.
And you can see, look at the price action. That's what happens generally after you make a square.
Yeah. So that looks good, solid. So let's see what the pullback looks like. And I think once we get on top of that, your equilibrium line and also the square, now, we can really confirm the low at that point.
Agreed. Agreed. All right, that's it for the grains. Let's move on to sugar.
Mm-hmm.
See what's going on with sugar. So here's your daily. We've been talking about sugar since it made this low and then made this pretty strong move up. You can see it here. You really got to go down to the 4 hour or the 60 minute to see it, but it did an ABCD down into this low,
Mm-hmm.
and look structurally where the low came in, right above that high as we were going into the low.
Mm-hmm.
So for me, the key level here is now let's see a reversal that gets us above this half square at 1937, and then we could really start moving on this thing. The low squared out. We called that out a couple of weeks ago, 2 or 3 weeks ago, that there was a nice square here. We squared out right on top of the full square.
Mm-hmm.
So this is your sort of your first push up, first pullback. Now we're looking for a reversal to get involved. Let's quickly jump over to the weekly and the monthly, and you can see it there. So high to low, we did 42 weeks.
Mm-hmm.
See, the low came in on this full square with a little false break, which is like what we like to see. Not only that, look at the week that we made the low. Look where we closed, right on the high of the week.
Yeah. Yeah.
Pushed up, hit the half square. Now we've got an inside bar. So we know if we take out the high of this inside bar next week, we should be having the direction move higher, and that's
Mm-hmm.
1977.
Mm-hmm.
There's your weekly. Now let's take a quick look at the monthly. Monthly, again, you see the same thing as the weekly. We had a low of a false break, reversed. We're above this half square, which is the key for the monthly, and that's 1784. And if you look at the distance we showed before on the monthly, we did 2 squares up, 1 square back. So this and also an interesting thing, low to low was 52 months.
Wow. Okay.
Yeah. So there's good stuff at the lows. We've seen a reversal on the daily. We've got this little ABCD down that sits on structural support. So I'm looking for some sort of reversal next week to jump in and trade the long side here. Anything else you want to add on sugar?
Well, I'd like to see it, well, clearly holding above the balance point would be
Key.
the key thing there. But I'm just looking at from the high, 180 degrees down is around 17.
So that would be taking out this low. Yep.
Like a false break kind of a thing would be way down there. But it doesn't have to get there. You know what I mean? But in order for that to happen, I'd like to see it hold above the 50% of the square.
Yeah. So that's the key thing. That's why we're looking for a daily reversal to get involved here, right? We're not catching the falling knife. We take out the high of this Friday's bar, then we get involved. Or if we make another low,
Exactly.
a
Right.
lower bar, we wait to take out the high of that bar, and that's your entry.
Right.
Ideally, as you say, it would be above the half square here, that
Mm-hmm.
1937,
Mm-hmm.
because then that gives us, the extra push of the geometry to take us
Yep.
up to the full square. So let's see how it goes. We'll let
Yep.
price dictate. I just like we got the first push up, did an ABC down. Now let's see if we get a reversal,
Mm-hmm.
and that's sugar. All right, let's jump over to nat gas.
Finally, starting to do
So
something.
yeah, so we've been talking about this thing all year as we were putting in this low. We had a first nice push up. Here's your first pullback. There's that harmonic balance point again, right? Acting as support because we're above it. And now we're pushing up and off of this low. We've made a high, made a higher low, and now a higher high today. Interesting little bar today, but the whole thing sits above the half square. As long as we're above this 232 area, the pull is going to be up to here, 283, 282.
Yeah.
So watch that closely to make sure we stay on top of that. Let's look at weekly monthlies. Those have been in triangles and remain in a triangle. But the difference is we're making those higher lows, and now we're pushing up out of here. So there's kind of a mean reversion trade too here. You could trade, going up to this 240, 250 which is the middle of the triangle.
Mm-hmm.
The key thing on a weekly basis is we want to get above 270. We can sit on top of 270, then we can attack, 370, 380. But the weekly is in a big triangle still, remains to be. Let's look at the monthly. 18 months high to low.
Pretty good.
Yeah, that's a good one. And we've already made a higher high this month than last month. So worst case scenario, we could push up to the top of this triangle, which gets us up to around 395.
Mm-hmm.
But it's, this sort of thing, as you can see, bases for a long, long time, and then it goes.
Mm-hmm.
So we're hoping to catch that sort of thing. It may not be this run, but if we can run from the current levels up to 380, 390, it's a nice move. But this pattern is fairly obvious that we're basing and pushing up. Now we're basing at a higher level. Let's
Mm-hmm.
see if this push up can take us to a new high. I know you watch Nat Gas every week. What's your perspective here?
Well, I agree. I think year-long bottom. I think it's putting in the right kind of price action. So I think it's about to move. So let's see. But we have to let the levels sort of point the way.
Exactly. So staying above the half square, this 232 is key. If we fall back below it, then we're going to bounce around and chop around a little more. But if we can stay on top of that half square, then the odds favor we're going to push up and test this full square.
Because the low squared out that came out in February. So that's a
Yes.
low.
Yeah.
And the run up on my chart was exactly 50% of the square. And we pulled back perfectly on top of the old resistance, like it's support now. Well, yeah, pretty much where your line is.
Yep. Right there.
And now we're starting to pull out. So it just pull up. So it just looks right.
So again, here's the philosophy and the way in which we try to trade, right? You try and catch the fat pitch, the third one, and this looks like it could be.
Mm-hmm.
Does it guarantee that it is? Absolutely not. But it gives us probability that we could catch it because we have the setup, we have a low that's squared out, we had the first push up, we had the first pullback that gave us a higher low, structurally sound. This could run.
Mm-hmm.
And price will tell us if it's going to run, it's going to stay above here. If it's going to keep running, it's going to get on top of this and stay on top of this. And then it's here. Then it's here. It's basically level to level. I mean, as crazy as you may think that sounds, this is how this thing runs. I mean,
Mm-hmm.
look at this. This was the big run in 22, right? It captured a level, moved up to the next level. Captured that level, moved up two levels. Pulled
Mm-hmm.
back, moved up to the next level. See, it does respect the levels.
Right.
So I think that's it for me, Barry. But I think the topic I want to discuss, because it's always a challenge, is okay, we look for the corner. We found the corners in like NQs and ES. Now how does your mindset change when you approach, okay, I've got enough evidence that I feel like I've got a good corner. Now what's the mindset change to? It's not searching for the corner anymore or validating the corner. What are you looking for now? What is it that goes into the mode you switch into now that you say, okay, I got confidence that we have this corner?
It's really watching the counter trends. And which is kind of what we do on the 30-minute for the S&P, the ones that we post.
Mm-hmm.
And I think as soon as the trend starts, you're looking for the counter trends because that'll tell you the strength of the move. Is it a 1 day pullback? Is it a 2 day pullback? Is it a 3 day pullback? And is it going deeper? Is it going sideways? Is it consolidating? That's really it. Till we stop trending, it's really watching the counter trends.
So why don't we do like a real time, let's spend 5 minutes and do a real time on the ES. Looking at the counter trends is great. Let's do a real time example with the E mini, right? Where we've had a counter trend. You've looked at some price action after the top that we and the corner that we've identified, and we're now comfortable that that is a good corner.
Mhm.
Let's show people how we evaluate the counter trends.
Okay. Let me take this cash chart and we
Okay.
can use this.
All right.
I'm going to have to really zoom in.
Yeah, because we got to look at the bars.
Got to really look at the bars. So this is the same chart that we looked at earlier. And in terms of a counter trend, let's take a look at, well, let's take it from the low here. This is the square we looked at earlier,
Mhm.
except zoomed in. Okay. Can you see it okay?
Yeah, looks
Okay.
fine.
So I remember this low coming in. We talked about this as it was coming in, before it came in, and as it was coming in. So
Hmm.
what are we talking about? What do we do once it comes in? Once it comes in, the idea is you want to know, did it really come in? You want to be able to confirm that. And there are lots of ways to confirm
Squares, geometry,
price
timing,
pattern, price
cycles,
action. Yep.
pattern. Yep.
Mhm.
A,
And the
B, C,
confirmation.
D's, those kind of things,
Yep.
right?
Lower time frames.
Yep.
And the confirmation can come in hours, the next day, or a few days. So it really depends on the time frame. Because but more time we have behind it, the better confirmation we can have. And here's the high that we got in March. We can take a look at that. So once I remember I was talking about this squaring out. So what happens when there's a downtrend actually starts? Well, it starts with the first pullback. Okay.
Mhm.
So just generally speaking, here's a move down, inside bar. Here's the first pullback. This made a higher high, higher than this low. I mean, higher, right? From this
Mhm.
low, made higher. So once that low is in place, we can look at this to be trending down. So if that's the case, we can even start here. If we start here, here's a high, first break, one. On the second bar up, we got an outside reversal.
Mhm.
So at that point, we're getting the first signal of, hey, there's a trend change. What happens next? We got the inside bar. Of course, if the lower that went out, that would have been ideal. Then we
Mhm.
went up a little bit higher and we turned down, took out this inside bar. You see this one?
Mhm.
We took
Yep.
out okay, once that happens, you know, not there's a high probability we have a high in place. And then you look for the counter trend. So where's the next first counter trend? We went down 1 day, came back. So here's the counter trend bar right
Yep.
there.
Right there.
Okay.
Yeah.
Ideally, you want to try to sell it as soon as you have identified that to stall out. So this is why we look at the 30-minute, the 4 hour, to get in on the early as you can. And with the 30-minute, you can, because you can kind of bracket that and know where the 30-minute levels are. And you
Mhm.
can get in to the new trend, which is to the downside. Well, if you don't want to do that, the next step is on the counter trend up, when you take out the low of that bar, which was right there.
Mm-hmm.
So the next day, the low got taken out. And the day after that, the high of that day never got taken out. So that's down, 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 down. So once you got that first counter trend, the rest of the move was just basically straight down because we didn't have any higher highs to deal with. Okay. So
Mm-hmm.
that's to the downside. Then it squared out here. What happens next? Here's a reversal bar, which means the following bar took out the high of the low bar. 1, 2 up. Here's your first counter trend right there.
Mm-hmm.
Right, Ben? You see that?
Yep.
Okay.
Yep. First down bar. Yep.
Yep. First down bar. So once that came in, again, if you're looking at the shorter term, this is where you try to get a position in because it's just easier to lower risk and all of that. Now, if you wanted to skip that, then you have to wait till the high of that bar gets taken out. And then here's your high of the bar. Your stops would have to be below this.
Yep.
Next day we had up, then 1, 2, 3, 3 bar correction, which held higher than that. Okay.
Yep. Higher low.
So the trend is still up. Now you add, so this is where you have to really monitor. If you want to really be a sniper, you have to look at the lower time frames, 30-minute, 4 hour, and try to get in here somewhere.
Mm-hmm.
And you might have to take a couple of shots, but you're trying to get long because why? Because the first counter trend's in place. We have a second one potentially in the works, and it's not necessarily technically going sideways. All right. So what happens after that? We have a big up opening, which means the futures ran all night,
Mm-hmm.
opened up here,
Yep.
and it's from there. It's up. We go 1, 2, 3 bars up, 1 bar down. So what do you look for? When you have 1 bar down, you look to see what it looks like from the counter trend perspective. So here's the bar down. How far is it from the last bar? I mean, what does it take to reverse the trend, right? You would have to actually have a couple of bars down and have a lower high and do the whole thing that we look at around corners.
Sure.
So long as it's 1 bar down, next day it's up, trade up, 1 bar down, up, up, right up into the 50% level of the square. So what happens when it gets to 50%? Well, we tend to cover and
Take some profit. Yep.
take some profits, pull up your stops. And because we know if it doesn't quickly get on top of it right away, then there's a deeper pullback, could be even to the quarter of the square. Anyway, so from there, we pull back. As it's pulling back, you have to keep your perspective. Did that finish the entire leg? And are we looking for an entirely new down leg? Possibly. So we're watching this to see what that next counter trend looks like. So here's a high, came back down, 1, 2, 3 bars up, inside bar, and the up, 1, 2, 3 bars up. Sorry. We have the low bar, 1, 2, 3 bars up, 4 bars up. And on the second bar, we took out the 50%. Right, Ben?
Mm-hmm.
So once you do that, here is what we call, breaking above and holding above. Here's breaking above, holding above. Now, once it breaks above, you expect it to have a counter trend of some type and correct before moving higher. Normally, you have a check back, anytime you break out normally. So here, you're watching the counter trends. What happened? Here we have an outside day, inside day, then we had an outside day reversal. So outside day reversal, once we take out the high of the inside day, well, you're back on the long side, and you saw what happened. And if you're trading on a lower time frame, there are plenty of places to get in here. Plenty of places to get in here. So I guess the theme here is once the market starts to move, you're really watching the counter trend. You're watching to see, are they 1 or 2 day counter trends? Are we doing more complex ones like a fourth wave kind of a counter trend? So that's what you're watching for. Now, we take the eye off from, was a high in or, is it a high or low? We switch to sort of watching the counter trend mode till we hit another level. So in this case, we hit the 90. Well, are we still looking to buy the counter trends? No. Now we stop and we wait to see what happens. He's going to consolidate a little bit and run back up. Or now are we switching the mode to downtrend? So here we're clearly running, we had 2 bars up and then boom.
Yep.
Yeah. Right? Inside bar, inside bar. inside bar to this. So one, 2 bars up, third bar was a big outside reversal. And that's always a sort of a giveaway, on a counter trend after squaring out. So that's why you have to kind of have the perspective in place. You want to know what happened, what happened at the high, what happened at the low. And this high, we know a lot of things happen. You guys can go back and check the tapes. A lot of things happened here. So once you know that, you're really itching to get on the other side of the new trend. Given
And
that
the
we can even get close to it, right? I
right,
remember we
and
remember.
the important thing too, Barry, there is that we're stuck under the 90. So it's we're already suspicious of the uptrend. Until we get on top of that 90, you're thinking, okay, I need to see real evidence that this thing is still bullish
Oh,
because
absolutely.
we're stuck under.
Listen, once we square out, just like here, once we come up, we had a 45 high to high. Once you have some kind of a balancing, let's say, act and have to take place, you're not buying this anywhere below 90 unless we get back down to the 50% or something like that.
Right.
So here, because we know, I mean, that's the whole point of watching these cycles. When they expire, the cycle turns down. So you want to get in at the earliest, lowest risk point of the cycle turning down. Well, that would be, on the first counter trend. So here's the first one, here's another one, and then boom. Basically it was a 1, 2, 3, A, B, C down.
Hmm.
And then we move again to the upside. So once we got up here, and you
And
can
got
tell
to the
this,
45. Once we got to that 45, in
yeah.
addition to all the other cycles we had hitting this week,
Mhm. Mhm.
we started saying, okay, we got to watch this. If we break, in this case, that was your 55.82 level, that's going to be trouble.
Right. So this is the daily chart. So base the
Yeah.
daily, that's what we wanted. That's what we're watching. And the reason how we got through this, not only did we get through it, we were trading this was because of the 30-minute, because it was giving us all the levels. We were stuck in the middle. It was giving us all the levels above and below.
Mhm.
And that was on the futures chart. But you know what I mean? So you want to manage it. As soon as you got into some kind of a consolidation, you want to manage it as a consolidation. So, and we were looking for it to break to one side or the other. And we know already what happened here. So you have to have that template in the background. Like, how did we get here? Which side is it likely to continue onto? Well, if it's to the upside, we would have clearly broken out and we would have started up in here somewhere once it started holding. But long as it's below, you want to be very careful and try to get in on the short side as it works out.
So,
Now,
so
yeah,
now, Barry, because I want to point this out so people can see in real time. Now that we've done one, two, we had one down inside bar, two more down.
right.
So now we're looking and say, okay, what does the next counter trend look like? Is it one bar? Can it only do an inside bar on Monday? That would be trouble for the bulls.
Yeah, we don't, or it might be just another big bar down to finish off the leg, at
Right.
53.15. So we don't know what the next is going to be. All we can do is like manage our risk. So like we talked about, I think that was last week. Now, once it's going your way, obviously you need to pull up your stops and manage it as you feel comfortable, right? If we think it's a bigger move and it needs more breathing room, then you have to adjust them. But if
Hmm.
you can manage to get back in on these things on shorter pullbacks, then you can trade it that way. So here, yeah, we could have an inside bar. We could have another down leg. We could have, I mean, to have a full blown counter trend bar, I don't think we're going to get that on
It's
Monday.
unlikely on Monday. Very
Unlikely
unlikely.
on something miraculous happens over the weekend.
Right.
So looks like it's either we're going to be down or it's going to be an inside bar. So one of the two. If that sets up, then if it's inside bar, then Tuesday sets up the story to we're going to go higher and try to do a decent counter trend, or we're going to have another inside. So it's really the bar to bar. It's like that's how you have to read the charts as far as managing it day to day. But overall, we kind of know what happened. So long as we have the high, we have the lower high in place, we're really looking for where this leg is going to end. And,
Right.
and so those are, and the ending is really probability. So, and we're not that smart to be able to catch, predict it way ahead of time. So we just play along. We trade it and we look at the risk and we manage it that way. Like these are all no risk trades at this point. So you just manage it that way. And here, you could have gotten caught once or twice, but like I showed you guys on the 30-minute, the risk is so low. you can afford to take a couple of shots at it. And even if you're early, because that will make up for, 10 or 20 stops at
For
this
sure.
level, but
For
using a
sure.
30-minute, right? So
I guess the point too is now we have the direction because the market has shown us by taking out certain levels. So we're looking to see, okay, when this leg ends, we really want to focus on the counter trends. Do the counter trends give us information that says, okay, this continues to be weak. So we're looking for a spot to sell it.
yeah, as long as this is going, right? Yeah.
That's right.
And
Yeah.
remember on the weekly, we only had like one bar down. So I mean,
Two bars down. That's it on the weekly.
yeah. So it's just, we're early in the game if this is actually a decent correction. So
Yeah.
once a 90-week, 90-day, this is basically a 3-month sort of a run up. It's not uncommon to have a 90-day or 90-degree pullback. So keeping
Right.
all that in mind, right? So then you just trade this as it comes up. I mean, this is just the way I see it. Lots of ways to do these things. Gann basically did counter trends is it really when he entered, and he was very careful in waiting for the counter trends and adding to his trades. So it's just one way, and there are lots of other ways. So
Well, great. I really appreciate that, Barry, because I think this is helpful for people to see and understand how you and how we sort of synthesize all the information together to actually make that decision of do you trade, do you watch, is the risk reward there? And you need to use the geometry, you need to use the structure, you need to use the cycles. It kind of all fits together to give you a good risk reward trade.
well, it sounds like a lot when you say it like that. But, you know,
Yeah, I mean, I know it sounds like a lot, but all of that goes into these decisions because you have the cycles with the geometry, with the technical analysis, and that's how
yeah.
we merge them.
I'm trying to
And
think. I guess there's a kind of a hierarchy and layers, right? And templates, hierarchies and templates. So you can look at the geometry as a template. You can
Mhm.
look at the monthly, weekly cycles that we do as a template. I mean, all of those things stack up to give us, is it up or down, right? So
Yeah,
you collect that info, and as you go forward, like when it gets to the battle line, it's like forward base, back behind the enemy, behind the front battle
right,
lines, kind
right.
of a thing. So you have things in the back burner, and then you have things in the front. So by the time you get to the front, you're only really concerned with what's happening with this bar and the bar before, and where's the next support resistance level. That's really all it is, because the other stuff is already digested, right?
Yeah,
This stuff is thought over months and months, so it's kind of ingrained at this
right.
point.
And I think that's the point is that, and why I brought this up is the main part about the cycles and the geometry. It's decided, right? We have the decision now. Right?
Yeah,
We have that in place
right.
until the market shows us through price action that that's not true anymore. That's the guiding principle. So we don't have to do the geometry again. We don't have to do the cycles again.
Exactly.
Now it's just focusing on that day-to-day price action.
Yeah. And so if you do it in a hierarchy like that in templates, then you don't really think about this all the time, but you have to spend a little bit of time every day. So, you remind yourself, like we kept talking about, this is, 90
That's big.
week cycle is big. And then we talked about, hey, we're coming up into this 45. That's big.
That's big.
So, we were just basically saying all the quiet parts out loud as every week, we do the show, just because that's the thinking, right? So once it clicks over, then you just get in there and start paddling. That's, then you just trade it, and looking at these counter trends is the best way I know, because it's basically price telling you where support is and resistance is and so forth and so on.
Well, Barry, and up until this week, we were still talking about, okay, are we going to get a lower high? Are we going to get a higher high? Is it going to be a false break?
False break up here,
Are we
right?
going to
Yeah.
sit on top of the 90 and keep going? Because that was unknown,
Yeah.
right?
Yeah.
We didn't have enough information. And then after Monday, we said, okay, that
Yeah.
decision's made.
Mm-hmm.
Right? We're good. We know that. So put that aside. That's in place. Now we just got to find the places to get in, and we'll watch the counter trends on the lower time
I mean, the
frames.
big sign for me was this right there.
Yeah. Yep.
This coming down, and just sitting here till the open.
Right.
right?
Right.
It was a big
Somebody
deal.
was holding it.
I mean, it was amazing. I mean, we've done it before. Like here, we did it and
Right.
it broke down, but we, came back. We did holding here.
Because the cycles weren't ready yet, right? The timing wasn't ready.
Exactly. So what's the difference here? Well, time. We had cycles expiring right in this period, and we had a false break. That high never got taken out, so
Yep.
that's a sign of weakness right there. If
Yep.
this was all ready to go higher that day, we would have gotten on top of this and held under, under 56.75, but above these highs, right? We would hold in here somewhere and then we'd be ready to go. But it didn't. We broke under. It was really squeezed in here, just looking really weak. So I think that was sort of like the uh first sign of weakness.
Right. Right.
Yeah. So you can think of it like that.
No, that's awesome. We'll
And
we'll
look at
keep
this.
having
Look at this,
these
Ben.
discussions.
Price finally got to the zone.
Yeah, they flushed it at the end of the day, and after regular trading hours, they flushed it.
Yeah. Yeah. Anyway,
So there we are in the zone.
is
So
that enough? I think that's the basics of.
no, it's listen, we could talk about this for hours. I just wanted to give people a perspective on sort of how to synthesize this stuff and how we're starting, how the thinking shifts now. The evidence is there. Okay, now it's all about counter trends, right?
Yeah, and you can go back. And this is so easy these days. I mean, you just go back and you can study the charts. This is what Gann talked about, studying the charts. What happens, you look at what happened, how, when you measure degrees, you want to see, how many degrees were these pullbacks on the way up.
Mhm.
That's how you use the charts and all the other divisions that come in. When we talk about it on a weekly basis, we're really looking at the bigger divisions to get to the point. But if you're just looking at these, you can study the size of a move, the measured moves, and when that exceeds, that's when Gann talked about the overbalance and all these other things. So all these comes up, it's all to stay in the trend.
Mhm.
The end of the trend is basically when the price and time balances, and you know that's how you have to look at it. There's two modes: getting to the corner, the CIT, and then you have the trending mode.
Yep.
Yep.
And now we're trending.
And now we're trending. Well, even that, look, it's kind of funny because we're trending now in other time
Hmm.
frames, and here we're trending.
Yep.
But if you switch back and look at it from a much bigger perspective, well, we have a high and a low, we're trapped in between, right?
Yeah. Yeah.
So the focus is really tricky. So that's why once you have your story that's working, you have a narrative that you can trust based on your work, then you just drop down and say, yep, this is trending till it's not trending, and go with it.
Amen.
Yeah.
Well, again, great show, Barry. I love these last segments because I think everybody benefits from them, including you and me. It's always good to hear it again and to
Yes.
review it.
Mhm.
Um, Everybody, please, if you like our work, we're trying to grow the channel and you've been great this year helping us do that. Please subscribe, ring the bell, add comments. We're going to listen to your comments and try and incorporate that stuff into the midweek videos. So
Mhm.
have a great weekend, everybody. The market's trending, all is well, and let's grab what we can while the sun is shining.
Sounds good. Thanks, Ben. Good job. We'll talk to you soon.
Thanks, everybody. We'll talk to you next week.
Bye bye.
Bye.